Hi, and welcome to this week's look at some of the major news stories affecting the market so far. And we're going to take a look, although we spoke about it last week, there's been a bit of a change for the Nasdaq 100, so we're taking a look at that. Second up, we're going to have a look at European currencies and what we can expect moving forwards, because there's some pretty big data out this week. Thirdly, we'll take a look at the dollar yen, just to balance out with some other currencies. And we'll finish off this week taking a look at Amazon, and that's had a pretty good week. So back to the Nasdaq 100, or the US Tech 100 Mini, as we call it at FX Open, and it failed to hold on to that 20,000 level. So last week, we spoke of how the Nasdaq went above, broke through 20,000 points for the first time. And we stated the upper line of the ascending channel that you can see in green on the chart could be resistance moving forwards. Lo and behold, a week later, and we have turned away from that upper green line. Now, one of the main drivers was Nvidia shares down approximately 15% over 3 trading sessions. Bloomberg quotes Buff Dormier, chief tech analyst at Kingview Partners, stating the price fell after potentially bullish news. 1, announcement of a stock split, which normally makes shares more accessible to a wider range of investors. 2, attaining the largest market cap in the market. Well, it's lost that title now. And 3, some strong fundamental data, particularly in the AI sector and market. Some analysts estimate that Nvidia controls 80% of the chip market that's needed for AI development models. So all pretty fundamentally good news, but bearish behaviour amidst bullish news is a bearish sign. Take a closer look at the chart and see what some technical analysis shows as well. Again, we're looking at the chart there, the US Tech 100 Mini at FX Open. 1, the price has failed to reach that upper boundary of the long-term blue channel. Now, according to Nasdaq data as well, on the 20th of June, that's indicated by the arrow that you can see, the market saw approximately 890,000 E-mini futures traded. That's the highest volume since the 19th of April, which also coincided with the important low that was recorded. Now, high volumes are a sign of big player activity, perhaps using that surge to close out their long positions. It's also shown by the candlestick with a long upper shadow formed on the 20th of June, and the price continued to decline on the 21st and the 24th of June. Now, bears have clearly revealed their presence when it comes to Nvidia, but if the bulls weekly attempt to push the index back above that 20,000 point mark, but as a weekly attempt, the bears could well become even more aggressive than they are now. So we're expecting a choppy few days, so don't forget your risk management techniques. Okay, next up, and we're going to take a look at some European currencies, and they face some crucial tests in the coming days and weeks, and what will happen. By the end of June, the start of July are packed with significant data and political events for both the euro and for Great British Pound. If we look at the euro, well, President Macron called a snap election after the far-right National Party won first place in the European parliamentary elections. And many believe if the far-right gain a majority in this general election, that could lead to a serious political crisis in the EU and obviously bearish pressure on the euro. Let's take a look at the chart for the euro against the US dollar. Well, technical analysis suggests if the price falls below 1.0660, that may well continue down to the sort of 1.06, the figure, down to 1.04, the figure sort of areas. Now, resumption of an upward trend, of course, it is possible with a confident consolidation above the 1.0740 to 1.07, the figure level. That could well be all driven by crucial data, which is out Thursday. 12 o'clock Thursday, GMT +3, that is. We've got consumer inflation in the Eurozone. 1 p.m. Thursday, GMT +3. Again, we've got the special EU summit of the heads of states. Could be a lot of comments coming out from that, so one to keep your ears open for. And at 3:30 GMT +3, we have the US GDP figure. Obviously, all of those could have a direct impact on the market quite quickly. So volatility could well abound again. So now let's have a quick look at the Great British Pound against the US dollar. And we've got a similar political uncertainty in the UK. About a month ago now, Rishi Sunak, the UK Prime Minister, called a general election on the 4th of July, which obviously not that far away. Now, the upcoming battle at the moment sees the price of cable Great British pound against the dollar, around the 1.26 mark. Now, if sellers break that 1.26 and consolidate below there, we may see a test of 1.2550 down to 1.2460. A reversal of the bearish scenario possible if that price moves above 1.2700. And again, we've got some pretty important events and data coming up. Thursday, 12:30. GMT +3. Got a speech by the Bank of England Governor Bailey, obviously going to talk about inflation, etc. there as well. Now, Friday morning at 900 hours, GMT +3. Got the business investments out for the UK. Always looked at to see how attractive the pound and the UK economy is going to be. Also on Friday, 9 o'clock again, GMT +3. We've got the UK GDP for the first quarter. All of this data coming out could well impact the markets and could well increase volatility, so don't forget your risk management techniques. Okay, sticking with currencies, but not European this time, and we're going to take a look at the dollar against the Japanese yen. Hit its highest rate since 1986. The chart shows us that early Thursday morning, the price was circa 160.58. Bloomberg reports that Japan's finance minister Shunichi Suzuki said it's desirable for the exchange rate to move in a stable manner. Sudden one-sided moves are not desirable, quite obviously. And he also said that we will analyse the background to this move with a high sense of urgency and take action as necessary, clearly hinting at the possibility of Bank of Japan intervention in the FX market again. This rhetoric, though, does not seem to have deterred the bulls, who are keeping the rate above the April high, which was the last time the Bank of Japan intervened, which resulted in a 4.75% decline in the price over 5 days. On the 24th of June, analysis from FX Open noted that the price was moving in a large upward channel, which you can see in blue. That the local rise, which is framed in the orange lines, could push the price to the boundary of the blue channel. Now, if we update that, just looking at it in the last couple of days or so, the price continues to hold in that orange channel. And the coming days, that April high of 160.20 may actually start to act as support, and that would be reinforced by the median line of the orange channel. Now, it does seem like the bulls are in charge. The RSI has not dropped below 50 since mid-June, but of course that could all change suddenly. And we've got a release of US inflation data Friday, 3:30, GMT +3. Now, it's possible that it could be a report of increasing inflation again, as we saw in Australia just earlier this week, and thus the US dollar would strengthen. That potentially prompts further intervention from the Bank of Japan. So that sort of level from the April high where they intervened before is going to be quite key, and what happens over the coming 2 or 3 days may well spur that Bank of Japan into intervention, and who knows what will happen with the price then. But what we can say for sure is if there is intervention, then we expect to see some major spikes in volatility. So again, don't forget your risk management techniques. Okay, finally this week, and we're going to take a look at US equity, and Amazon sets a new all-time high. The Wednesday, take a look at the chart. Wednesday, the price surpassed that psychological level of $190 per share. In fact, closing above $193.41 per share, a new all-time high. Now, growth is approximately plus 3.9% on the day, and we see a closing candle at the upper part, which shows signs of strong demand. And the market cap also exceeded $2 trillion. Now, according to Benzinga, this has been driven by news that the Bank of America maintained its buy recommendation and in fact raised its target price from $210 to $220 per share. And also news that Amazon is preparing to launch a discount section very similar to Temu, which offers direct delivery from China and has been taking up quite a large share of market recently. Let's have a look at what the technical analysis on the chart shows us. Well, the price is moving in the upward channel that you can see in blue, and it's in the upper heart of it, which again would be an indication of strong demand. The rising lows that you can see, A to B to C, which formed under that $190 resistance, reflect an essence of a cup and handle pattern, again a bullish sign. The potential for the bulls to rise to the upper boundary of the channel is there as well, and the bulls may well be supported by that $190 level, which was previous resistance, becoming support and the median line of the blue channel that you can see there. And in fact, TipRanks states the average target price predicted by Wall Street analysts is $221.55. Now that would be an increase of circa 14% from current levels within 12 months. So it certainly seems that Amazon is on the march back up again, and probably a bit of a needed fillip for some of the markets. But as ever, news will drive the markets over the coming weeks and days. Generally, we've got geopolitical concerns, we've got political upheaval in Europe, and of course, the ever dark cloud of inflation. So don't forget your risk management techniques, and we wish you luck with your trading in the week ahead. Bye for now.